Welcome to the Finance in English podcast, where we delve into the world of money management, investments, and all things finance related to help you make smarter financial decisions. In the latest updates concerning Binance, the Philippine Securities and Exchange Commission, SEC, has issued a stern warning against the organization for carrying out unauthorized operations in the country. The SEC has pointed out that Binance is operating without a license and has violated securities laws by promoting its services within the country. Further, individuals involved in promoting or trading on the Binance platform were warned of potential imprisonment and penalties linked to such unauthorized activities. Amidst these regulatory challenges, there is an interesting update about the former CEO of Binance, Changpeng Zhao, fondly known as CZ. Despite stepping down as CEO, his influence in the crypto world remains, with recent news about his plan to invest in a new venture that incorporates cryptocurrency. This continues to reflect his ongoing commitment to the industry. These developments bring added layers to Binance's situation as it grapples with regulatory issues while its former CEO ventures into new horizons. We will continue to monitor this unfolding story for potential impacts on Binance and the broader cryptocurrency market. Stay tuned for further updates. In recent BitMEX news, the founder and former CEO of the cryptocurrency exchange, Arthur Hayes, has publicly criticized the way the United States has treated Changpeng Zhao, also known as CZ, and his cryptocurrency exchange, Binance. Calling the treatment absurd, Hayes has voiced his disapproval of the penalties directed towards Binance, viewing them as evidence of institutional bias against the cryptocurrency and blockchain technology sectors. In related news, Hayes has revealed his plan to move his focus away from T-bills, treasury bills, investments, deciding instead to concentrate solely on crypto investments. This strategic shift underscores his firm belief in the promising future of the cryptocurrency sector. As the cryptocurrency industry attempts to adapt to worldwide regulatory challenges and scrutiny, the viewpoints of influential figures like Arthur Hayes offer insight into diverse perspectives about the treatment of various crypto platforms and their potential for growth in the future. Coinbase, a popular cryptocurrency exchange platform, has been performing exceedingly well in the market as its shares continue to surge, reaching new high levels recently. This impressive performance has led to an endorsement from XRP lawyer John Deaton, who has recommended investing in these shares. In fact, Coinbase stock has even outstripped both Bitcoin and Ethereum this year, reaching its peak levels and potentially influencing the overall cryptocurrency market. Coinbase's CEO views the recent settlement between Binance and regulatory authorities as a positive stride for the entire crypto industry, positioning Coinbase as a strong alternative to Binance. Amid the positive news, however, there are concerns for Coinbase users, as some have received a subpoena notice from the United States regulatory agency, the Commodity Futures Trading Commission, CFTC. This subpoena pertains to an ongoing investigation into Bybit, meaning Coinbase users' Bitcoin trading data could be shared with the CFTC. Despite the concerns surrounding the subpoena, Coinbase shares continue to ascend, further solidifying its standing in the cryptocurrency sector. In the latest Cathie Wood news, the esteemed investor and ARK Invest founder is making strategic adjustments to her portfolio amid the rising anticipation for the Bitcoin ETF launch. Notably, she has added shares of Robinhood to capitalize on potential opportunities in the cryptocurrency space. Simultaneously, as Coinbase's stock price continues to steadily rise, ARK Invest has sold $5.3 million worth of its shares, indicating a possible strategy of profit-taking and capital reallocation. In the biotech sector, Wood has demonstrated her confidence by acquiring nearly 2 million shares of a relatively cheap stock. This move is noteworthy given the stock's struggling performance and a 15% down in its yearly value, underlining her ability to discern potential long-term value in the market. Overall, Cathie Wood continues to embody bold investment strategies, altering her holdings to seize emerging trends and promising opportunities. Her maneuvers in both crypto and biotech sectors showcase her readiness to embrace risks and uncover value in realms others might miss. It will certainly be intriguing to observe the eventual outcomes of these decisions and if they yield significant returns for ARK Invest and its clientele. Franklin Templeton, the investment management firm, has updated its application for a Bitcoin ETF, following a delay by the U.S. Securities and Exchange Commission, SEC. The firm intends to have its Bitcoin ETF listed on the NYSE's ARKA platform, a popular exchange for ETFs. In positive developments, an industry expert has predicted the green-lighting of multiple spot Bitcoin ETFs amidst rising demand for cryptocurrency-related investment products through regulated channels. The SEC has shown progress in Franklin Templeton's Bitcoin ETF application decision process, indicating ongoing active review towards a final ruling. Interestingly, The SEC has invited public input on the proposed ETF, underlining their commitment to transparency and inclusivity in their regulatory decisions. Stay updated with further news on Franklin Templeton's Bitcoin ETF application, along with other happenings in the cryptocurrency market. We regretfully announce the passing of Charlie Munger, the instrumental figure who, alongside Warren Buffett, built Berkshire Hathaway. Munger died peacefully in a California hospital at the age of 99, leaving behind an impressive legacy in the investment world. Munger undeniably had an immense impact on Berkshire Hathaway. He, as the former vice chairman of the company, played a pivotal role in transforming it into the global conglomerate it is today. His ownership of over $2 billion worth of Berkshire stock and other assets projected a potential net worth of over $10 billion if held onto. Remembered as a legendary figure in investing, Munger embodied 5 key lessons that have benefited the investment community. He emphasized the importance of a long-term perspective, patience, and avoidance of excessive risk. Furthermore, he underscored the value of being knowledgeable across varied disciplines and maintaining a rational mindset during investment decisions. Popular for his down-to-earth communication style, Munger was openly skeptical of the finance industry and was critical of sectors like cryptocurrency and artificial intelligence, labeling them overhyped and foolish. His forthright approach and willingness to challenge conventional ideas garnered him much respect. As tributes pour in to laud his invaluable contributions, Charlie Munger's passing indeed marks a monumental loss for the investment world. Let us honor his memory and profound contributions by reflecting on and applying the lessons he imparted in our own investment strategies. There have been some intriguing developments in China's economic and political landscape recently. Of notable mention is the trend among Chinese families who are increasingly sending their money overseas. This migration of funds is driven by growing apprehension about China's economic and political future, as citizens aim to safeguard their wealth by diversifying their assets abroad. Simultaneously, a cheaper currency has served as a boon for China's export sector. A softened yuan has resulted in Chinese commodities becoming more affordable for international purchasers. Consequently, the country is seeing a surge in exports, providing some positive impetus for the nation's economy amidst the prevailing global uncertainties. Also on the economic front, the former governor of the People's Bank of China, BOC, has indicated that they are in the final stages of testing the central bank digital currency, CBDC, the digital yuan. This significant development signals a move towards the digitization of China's currency and could initiate wide-scale transformations in its financial system. On the political end, President Xi Jinping has reiterated his dedication to strengthening China's private sector. He acknowledges the crucial role of private enterprises in fostering innovation and supporting economic growth. Consequently, Xi has declared a suite of reforms designed to support private sector growth and create an environment conducive to private enterprises' continued contribution to China's economy. Addressing the countrywide issue of capital flight, President Xi has introduced reforms intended to encourage both domestic and foreign investments and retain capital within China. These measures aim to stabilize the economy, attract and keep investments at home, and thereby facilitate continuous growth in the country's financial system. In sum, these are the recent critical updates concerning China's dynamic and constantly evolving economic and political scenes. Stay tuned for further detailed reports. In the latest developments from the Consumer Financial Protection Bureau, CFPB, financial firms are expressing opposition to the CFPB's proposed ban on including medical debt in credit reports. These firms raise concerns about potential negative consequences such as restricted lending, higher borrowing costs, and increased credit denials. The proposal's intent is to address the unfairness often associated with medical debt, which frequently arises from unexpected and unavoidable circumstances. Critics, however, argue that excluding medical debt from credit bureaus could weaken the effectiveness of credit scores as indicators of individuals' ability to repay loans. In other news, the CFPB has imposed a hefty $12 million fine on Bank of America for submitting incomplete mortgage lending data. This penalty follows the bank's failure to provide accurate and complete information as mandated by the Home Mortgage Disclosure Act. These events underline the CFPB's ongoing commitment to regulating and protecting consumers' financial interests. Stay tuned for further updates on the activities of the Consumer Financial Protection Bureau. In recent SEC news, the Securities and Exchange Commission has advanced in determining Franklin Templeton's Bitcoin Exchange Traded Fund, ETF, application, drawing us nearer to its potential approval. However, a decision on the spot Bitcoin ETF applications, submitted by both Franklin Templeton and Hashdex, has been deferred. While this delay might be viewed as a setback by some, It represents the SEC's continued efforts to thoroughly review and evaluate the implications of Bitcoin ETFs. In the midst of these developments, Bitcoin has reached an impressive $38,000 in 2023, underscoring the increasing interest and potential of digital assets. The SEC has further acknowledged this surging market interest by requesting public opinion on the proposed Bitcoin ETFs from Franklin Templeton and Hashdex. Additionally, they have extended the window for public comments on these applications, aiming to ensure comprehensive feedback. All these moves signal the SEC's commitment to carefully understand the potential impact of Bitcoin ETFs, acknowledging the growing demand and strong market performance of cryptocurrencies like Bitcoin. In the latest Federal Reserve news, Bitcoin has surged above $38,000 per coin in response to dovish comments from the central bank indicating a more accommodative monetary policy. The increase in the value of this cryptocurrency has been further fueled by the dollar's decline to a 3-month low and Bitcoin topping $37.7 thousand following dovish remarks from Fed's Chris Waller on potential rate cuts. While some have benefited from this bullish sentiment, other aspects of the economy present a different picture. Small businesses and risky borrowers are finding themselves burdened with rising costs. Conversely, the biggest corporations appear to have largely avoided any impact from higher interest rates. Interestingly, Wall Street concluded a slightly higher day after receiving mixed messages from the Federal Reserve. In particular, Micron experienced a drop in its stock price due to anticipated higher operating costs. However, U.S. stocks, on the whole, have seen an upward trend buoyed by the Federal Reserve's comments that seem to suggest that rate hikes are done. This has led to an improvement in investor sentiment and has generated anticipation amongst investors for potential rate cuts by May of next year. That concludes a summary of the most recent Federal Reserve news. Keep an eye out for more updates. fxopen dives into compelling subjects for its readers, one of particular interest being the impact of central banks on forex trading, specifically for the Eurust. Central banks have a considerable role in molding the value of currencies in the world of foreign exchange. To help traders understand this impact, fxopen offers a detailed analysis of how central bank decisions and policies can affect the exchange rate of euro and US dollar, providing invaluable recommendations for forex enthusiasts. Simultaneously, an analysis of markets including US dollar to Japanese yen, pound sterling to US dollar, as well as euro to US dollar, gives a more intimate glance at these ever-changing currency pair landscapes. Highlighting US dollar, the analysis elaborates on the recent slide experienced by the greenback against the Japanese yen, British pound, and euro, further enhancing traders' knowledge of the market dynamics and facilitating more informed trading strategy decisions. To offer fresh investment ventures, fxopen now features 10 new ETF CFDs in the Chinese market following its growing global economic influence. Undertaking these options can diversify one's investment portfolio and distribute risk. A detailed overview is provided by fxopen on these fresh ETF CFDs, assisting traders in their exploration for profitable investments. Stay connected with fxopen for more exciting updates and insightful discussions. Interactive Brokers has announced its exciting new development of expanding cryptocurrency trading for retail investors in Hong Kong, making it the front page in financial industry news. This pioneering move by Interactive Brokers demonstrates its devotion to meet their customers' evolving needs by staying at the cutting edge of the financial industry. In collaboration with OSL, a leading digital asset platform, Interactive Brokers now offers crypto trading for retail clients in the area. The partnership with OSL delivers a platform that gives Hong Kong's retail investors regulated access to digital asset services and to delve into the potential of cryptocurrencies. This bold move by Interactive Brokers serves as an enrichment for retail investors in Hong Kong, offering new opportunities to diversify their investment portfolio as cryptocurrencies continue to gain mainstream approval and popularity. This wraps up the latest news on Interactive Brokers' cryptocurrency trading expansion to Hong Kong's retail investors. Stay in the loop for more financial industry updates and insights. In the latest NASDAQ updates, some significant market shifts are in the spotlight. Green Plains is turning heads as it hits a new one-year low at $23.15. This slump in value indicates the company is grappling with challenges, adversely impacting its stock performance. Simultaneously, MGP Ingredients, traded on NASDAQ under MGPI, has seen a surge in trading volumes. This increase in activity, however, has not strengthened the company's position, with its stocks declining from the last trading session. Meanwhile, notable insider activity in the stock market includes strategic moves by United States Steel and Hibbett. The outpouring sell-off by insiders might signal a shift in market sentiment or a fresh approach among these companies. Finally, Lions Bancorp Incorporated has declared a dividend of 7 cents per share, an announcement sure to be welcomed by shareholders as it presents a return on their investments. We'll continue monitoring the situation and updating you with the latest NASDAQ news and other significant developments in the stock market. In recent updates from the Phoenix Group, the Bitcoin mining company has announced a postponement of its share listing on the Abu Dhabi Securities Exchange. The delay is due to the UAE's National Day, a major countrywide celebration. In consideration for this special event, the group has rescheduled its initial public offering, IPO, to December 5, 2023. Thus, mark December 5 on your calendars for Phoenix Group's new share listing date. Stay tuned for more exciting updates on this development. In the latest update from Ravi Menon, Singapore's banking chief, there has been a striking prediction about the demise of private cryptocurrencies. Menon states that these digital currencies have failed, indicating that they may soon be replaced by central bank digital currencies, stablecoins, and tokenized bank liabilities. This significant shift in the financial industry from the country's top banker forecasts the potential endgame for private cryptos, heralding the beginning of a new era where digital currencies take center stage. With Menon's prediction, Singapore is not only positioning itself to be a prominent player in the digital asset landscape but also suggesting a future where private cryptocurrencies might not survive. In the latest Standard Chartered news, the banking giant continues to enforce its long-term projection for Bitcoin, predicting the cryptocurrency's value to reach a remarkable $100,000 by the end of 2024. This forecast is a reinforcement of their earlier predictions and emphasizes their persisting confidence in the future growth and popularity of Bitcoin among both institutional and retail investors. In addition to their bold Bitcoin outlook, Standard Chartered suggests that the forthcoming spot Bitcoin exchange traded fund, ETF, in the United States could potentially strengthen Bitcoin's position as a mainstream investment asset. Though details about the ETF are yet to be unveiled, the bank anticipates it could deliver an extra impetus to Bitcoin's value. In another development, Standard Chartered has established a strategic partnership with Checkout.com, a global payment solutions provider. This alliance aims to amplify and streamline digital commerce in the Middle East and North Africa, MENA, region. Utilizing each organization's strengths, they intend to provide innovative, seamless payment experiences to businesses and consumers alike. To summarize, Standard Chartered stands by their $100,000 Bitcoin valuation target by the end of 2024. The projection highlights the mounting faith in Bitcoin's potential as an investment asset and its consistent rise in popularity. HSBC has made significant strides in strengthening their services for non-resident Indian clients by recently hiring a former UBS private banker specialized in this specific segment. On the other hand, UBS is focusing on its internal transitions, with Chairman Callum Kelleher spearheading efforts to ensure a smooth leadership succession, as well as advocating for enhanced powers for the Swiss financial regulator, FINMA. Kelleher is keen on creating a list of potential successors to take over from current CEO Sergio Ermotti, as managing the leadership transition at UBS, one of the biggest roles in global banking, is crucial. In his capacity as chairman, Kelleher also believes that increased authority for FINMA can contribute towards the stability and stronger regulation of the Swiss financial system. Furthering UBS's focus on market predictions, Chief Investment Officer Mark Hafley singles out 2024 as the beginning of a new era in global financial markets. As such, UBS advises investors to manage their liquidity carefully, prioritize quality asset purchases, hedge against market risks, and diversify their portfolios with alternative credit options. With regards to investment in Asia, UBS sees a shift towards consumption-driven economic models. However, geopolitical uncertainties could affect investment strategies in the region. For investors looking to maneuver within this landscape, UBS suggests investing in equities of higher quality regional heavyweights and well-funded artificial intelligence companies, as well as Asian investment-grade bonds and short-term range trading opportunities in foreign exchange. Overall, UBS continues to devote significant resources to managing leadership transitions and offering comprehensive market forecasts and investment strategies to help clients navigate the dynamic financial market. Thank you for joining us on this episode where we delved into the world of finance, exploring everything from budgeting and investing to understanding market trends and making wise financial decisions.